$4 million. The next bar couldn't hold it, $3.8 million. The next bar, you came in with $3 million, couldn't hold it. The next bar, you had 6.9 million shares come in. It couldn't even get up to the top of that. Very interesting, folks. So, you know, the work's not done up there. It's going to try to bust through it. We'll see what it does. And we'll go take a look at anything else, some other charts. And, you know, I was noticing here, because what I also did during that last segment was I showed you, I'll come back to this, actually, because in case we've got some new listeners in here. And I kind of blew through this fairly quickly. And that's just simply this, and that is I'm showing here, you know, you'll hear my commercial and where I'm talking about, you know, 1%, understanding the importance of 1% and what it is that you risk in your trading. And it's so key to understand because, you know, what happens is most people don't do the numbers. And the numbers, you know, don't do the work. You know, it's like a bet that I once got in. I used to travel over to Japan 3 to 4 times a year. And my friend, we had business over there, and my friends over there loved golf. They loved golf in Japan. And these guys were very successful, and I would go over there, we would do work, but certainly part of our work was really done on the golf course, if you will. And they used to play 2 games over there. Now, the deal was when I would go over there, I would be their guest. When they would come over here, they would be my guest. And, you know, it really worked out pretty well for both of us. Now, they played 2 games. One game was called Las Vegas. And, in fact, I'm going to try to do this while we're even talking. If I can. And so one game was called Las Vegas. And I'm not going to go into that game, but we would play that, and it was played for some pretty, you know, big money. Bigger money than what I play for here in the U.S., but, you know, it costs more to play golf there. I was their guest. I'm in for any game. You know, I just made sure that I took plenty of cash with me. And I always did pretty well. Well, this one time that we're playing there, we're playing at a course where they play the Japanese Masters. Here it's Augusta. There it's in some place in Gotemba or something like that. And we're playing, and they said, you know, what they wanted to do was they wanted to start off playing. The first hole was going to be a dime, and at every hole thereafter was just simply going to double. Now, it was split amongst foursomes, so I'm saying, wow, a dime. You know, we're going to split, you know, if you lose a hole, you know, I have 25% of a dime, or on the next hole I've got 25% of 20 cents, and so, hey, I'm in, right? Well, here's the problem, folks. I failed to really do the work. To me, that sounded like nothing, right? Well, I've just put up 10 cents on my screen here, and what I'm going to do here is I'm going to go to the next line item, and I'm going to put times 2, if you will. So the next hole was 20 cents. Let me see if I can go ahead here and make this a little bit larger for everybody to see, because it's really important, folks, that you do the work. Let me go ahead and put this in dollars, if you will, and I'm going to just simply come down for 18 holes. So the next hole, right, 40 cents, no big deal. You come home, what's the next hole? 80 cents. You know, this math is pretty easy. Well, if I zoom all the way down to 18 holes, folks, when we got to the 18th hole, and say, I got to blow this up. We got down to the 18th hole, folks. That hole was worth $13,107. So again, you want to be able to do the homework. You want to be able to, you know, that taught me absolutely to do the homework, you know, and that's actually the power of compounding. This is a true story. And luckily, I assume luckily, you know, for the last hole, you know, it was a wash. And but there was still a lot of money on the table. Now, the deal was there that the winner of that game, the winner of this game here, had to buy dinner. Well, dinner was all the way back in Tokyo, where we would go to, these guys had access to a private Ginza sushi bar, where the actual meal, just for the meal, this is, 15 plus years ago, I'm guessing by now. Could be 20 years ago. This is where the, just for the sushi was $500 a person. And, you know, we usually had a foursome. Sometimes we'd have 8 guys. So it could be fairly expensive just to, you know, you almost didn't want to win because of all the sake and the sushi. And you bought dinner. If you won, you had the pride, you had the honor of mine. But you absolutely want to do the work. You want to understand the power of compounding. You want to understand the power of 1%, folks, because that really is doing the homework. You know, I happen to have a USA Today here. And on this USA Today, so that, you know, if you take a look at what the one-year rates are, all right, the one-year rates on latest CD yields, right now you're getting 0.37%. 0.37%. You know, last year you got a 0.5%. folks, on this money game here that I've got, 1%, if you just simply took 1% of your trading capital, I'm just starting with 10 grand. Like, I'll put 100 grand here right now, because most folks have got $100,000 that they've got invested in the market. So let's just take a look at what that means. You'll see that it doesn't matter whether it's 100 grand, whether it's 10 grand, whether it's $1 million, that I go ahead and put in here on this screen. And if you just simply risked 1%, so that would mean if you had $100,000 in the marketplace, on your next trade, what you would risk is 1% or $1,000. That would be your total risk. You would take that and you would divide that by your stop. That would tell you how many shares you should be buying. If you had 18 losing trades in a row, when you get down to the 18 losing trades, folks, risking only 1%, you'd have 83+% of your balance still there. 83% have only risked 1%. Now, if you had risked 50 cents, you made $1, meaning, you know, your stop was 50 cents, and you sold the stock and it was up $1, you would have doubled your money. That's a 2-to-1. Most times you hear us talking about a 3-to-1 reward to risk ratio. If just simply on 2-to-1, folks, and you had 18 winning trades in a row, you're up 43%. 43% versus what is it? 0.37%. Let me tell you, folks, you absolutely want to understand the power of 1%, the money game, position sizing. It'll totally open your mind. It'll make you a better trader. Speaking of better traders, let's go to Rick in British Columbia. Rick, thanks for calling. Rick, you there?
Yeah, I'm doing. You hear me okay?
I can now. Thanks for calling. Thanks for holding.
Hey, I'd like you to put the euro and the dollar on a weekly, and I thought the number. I don't have the exact numbers, but it looks like about 139. And of course, there's some G8 meetings and lots of hoopla. And if things stay quiet, the short's got to cover some more. But it looks to me like maybe Monday, maybe even overnight, that the euro might just top out, and I'd like to see what your take is, and you know, reciprocate that with the dollar.
Well, I think that you know, when I'm taking a look at the markets and where we're at, you know, on the first, I can't understand. I haven't been able to figure out in my mind how you can weaken the euro because of what it is that they're going to do as far as injecting into their system, you know, buying bonds, whatever it is that they're going to do in order to try to kick the can down the road a little bit further, and how the dollar's gotten weaker. Okay, that is, if I can't figure. Can you help me understand that? Just fundamentally.
Well,
I can't figure that one out. But that's just, you know, but, you know, I don't really trade fundamentally. My fundamentals are the computer screens, if you will. And, you know, I do have the weekly chart up on the screen, and it's a nice candle that you've got. You know, you've got a fairly wide-ranging bar. And on the weekly chart, if you just simply went to the September 2nd high down to the low that we made last week, what you would absolutely see is that the euro could get up to the 140 level. But that if I go all the way down to the high here that we had on May 6th, when our markets had made their high, you know, then what you're really only at is about the 0.382 area. So you're at that 138, and you're at 138.2, 138.3 was really the 382. You're at 138.6. And when I take a look at our markets, you know, when I came on this morning on my 9 o'clock show, I was giving people a trade on the SDS, which was to short the S&Ps. And, you know, so when I take a look at what's really going on resistance-wise in the real marketplace, you know, and we had a caller from, we had Doug from Colorado that was calling earlier, you know, and the question is who's controlling what? Is it the dollar? Is it the markets? And, you know, my position was I just really trade the screen, you know, that I'm in front of. So, you know, tell me what you're looking at on the weekly chart on the euro where you think that it's topping out this week. Are you looking at that 382 area, or is there something else that maybe?
Well, I'm looking at about 139, but I think the euro's so heavily shorted because of all the news and negativity. And we got meetings this weekend, and so nobody's really saying anything. And but we're going up on fumes.
Yes.
And the FXE, which isn't as reliable, but that's one ETF trading vehicle.
Okay.
There's 138.50.
Yeah.
Somewhere in that level. And then, you know, if you got some short covering, because like Fridays and Mondays are light trading, right? And then,
yes.
You know, things could be quiet, and then, you know, Japan and Asia opens up Sunday night, and then it gets one more hoopla into that, what you just said. It could go to 140 because if the short's got to cover. And then I can see it pulling all the way back to like 134.
Well, look, at this stage, it's still in a, it's got some, it certainly has this resistance, in that 137 area. But that's that 0.786 retracement. I'm looking on the daily chart now. That's some resistance. But when you take a look at, if it does what you suggest here, then that retracement area on the weekly chart is only a 0.32 retracement. And then, that would indicate, that there's going to be some problems over there, that, just even my fundamental thinking of how is it that you're putting, money into Europe, how are they putting more euros out there, if you will, and the U.S. dollar's been getting weaker. At some point in time, you would think that would just flip, if you will. And when that flips, if this has been nothing but air, this has been a lot of short covering, but when that flips, it'll take right off. Then we see some real jolts in the marketplace. And when you take a look at some of the news that came out, I think, today, retail sales, Google, stay on the line, Rick. When we get back, we'll go take a look at that. We'll finish it up, folks. We'd also love to hear from you. But we're on with our co-host, Rick from British Columbia, 877-927-6648. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Direxion's alternative strategy funds feature built-in tactical management to help you find clarity for the path ahead. Direxion Funds. I'm with X. To learn more about Direxion's alternative strategy funds, please visit TFNN.com and click on the Direxion Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Funds carefully before investing. The prospectus contains this and other information about Direxion Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to DirexionFunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. I'm your host, Steve Rhodes. Welcome to the Money Masters. We got the Dow up 107, S&P's up 13, Composite up 30, Russell 2000 up 4, and the NDX up 32. And we're on with Rick from British Columbia. You know, Rick, and one of the things that I think will give us a signal here at about 11:30 East Coast time, you know, is the DAX and where the DAX closes. You know, with a strong market, if you will, or what looks like a strong market, you know, price-wise, the DAX is still going against the swing point out there from August 15th. Has tried to hit it. The low on that swing point is 6,008. You're trading at 59.88 right now. You know, looks like it wants to reject that swing point again for the third time. Third time's a charm, baby.
Yeah, well, you know what? I'll tell you. I looked before I sign off because, like I say, the euro.
Yeah.
I just think we can still go higher Monday. But as we know, you know, somebody opens their mouth and it doesn't sound good out of Europe, and you know whatever you think. But I look at the IWM.
Yeah.
And I put it on a weekly.
Yeah.
And 5 weeks ago, that little high at 72, because I went over the Qs, the SPYs, and I didn't see it on those. But the IWM has a little high up at 72 that technically has volume up there.
See.
And I'm not saying we're going there, but I just, you know, we're going up on air on just about everything I look at.
Yes.
You agree with that?
Well, I do.
Like, I mean, not even, like, even on a weekly this week, you look at just about anything. You know, it's not just a little bit, it's huge.
Well, look, there's no question that the institutional money is sitting on the sidelines. We have not had a follow-through day, you know, ever since we had the rally going back to, you know, last week. And so, you know, and this is a time where, you know, when you start getting into the middle of October, there is lots of pension fund contributions that are coming in to these companies. So there's a lot of money. You know, the money is right now just accumulated on the sidelines, and you know, it's so the institutional money is not there, and so you can put that fundamental thing, you know, with the picture that we're, you know, that I'm looking at, just simply part of the, you know, I wore my Japan shirt because we're talking so much about Japanese candlesticks, if you will. And, you know, and I've even got some Japanese candlesticks, and I'm going to go ahead and give out on some scans that I did last night. I haven't had a chance to scan through all the stocks, but for those folks that listen that, you know, want to take a look at some bearish engulfing patterns that set up over the last couple of days, and some shooting stars, which are really inverted hammers, if you will, I'm going to give them a whole list of stocks that they can take a look at, because I also printed out, you know, what were the bullish patterns that were out there, and I didn't come up with a bunch yesterday. So it just kind of, you know, confirms what it is that you're sharing, you know, with us here, and your, you know, and your thoughts on the marketplace. So, you know, my opinion, I try to keep my opinions as much as I can clear and just say, you know, what does the chart tell me? Because when I do that and I just trade the chart, and I don't worry about the newspaper or the phone or something else, you know, it's easier when you don't clutter your own mind, you know, with some of those things. It's fun after you've traded, then you can go back and you can see what they're saying here or there. You know, I don't even second guess myself, because when you're only trading, when you realize the power of that risk of just trading 1%, Rick, it's amazing. Yeah. Whether it's currencies, you got to do the same thing in currency. You know, currency, you talk about leverage. Now you're talking about 10 to 1. And when you can understand the stops that you would use in currency, in the currency pairs, and my preference is the currency pairs versus the ETFs, because in the currency pairs, you know, you're in, you're out, you're stopped out if you're wrong on your trade, and if you're trading the currency pairs, folks, close your trades out by 1 o'clock in the afternoon, 2 o'clock latest on Friday. There is no reason, in my opinion, for you to hold those trades. Like Rick is pointing out, there's too much volatility. People meeting again over in Europe, and any one wrong, you know, word, if you will, you know, can totally turn things upside down.
Yeah, no, exactly. Well, the thing is, if you want to trade currency, think what you just said. Europe closes at 8:30. It's probably not a bad time. That's our time, so 11:30 your time.
Yep,
yeah,
absolutely. Yeah, you want to close that out. So
okay, you have a good day, Steve.
I will. You too. Thanks for calling, and it's going to be a great weekend, folks. You know, talk about sports lineup here. Now, I hear from from what I've read is that in the paper this morning that they're talking about in the NBA, if they don't have a decision, a meeting of the minds between the players and the coaches, that there won't be any games on Christmas Day. Not that would really bother me a whole lot, one way or another. And but it is amazing. You know, Tom was bringing up the point a couple days ago where I think he said that the difference between where the players were at and where the owners were at was about $300 million. And that in the first week alone, by not having games, what have you, overall, in summary, they lost $200+ million. Well, that was just the first week. We're talking about not having games till December. That's just insane. But look, great sports weekend. You got football. You got Michigan State. You got the Tigers, Texas Rangers. You got the Red Wings on Saturday. Yeah, there's other teams playing, but I love those teams from Michigan. Anyways, we'll be right back, folks. 877-927-6648.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in the equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to TFNN.com or call our office directly at 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, Fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. I'm Steve Rhodes, co-host of the Money Masters. My partner is out today traveling, and hopefully he's going to have a great weekend up in the Northeast. Don't know what the weather's going to be like up there, but down here in Florida, it's absolutely fabulous, folks. Thanks for joining us. You got the Dow up 93 right now. The S&P's up 11. Composite up 26. You've got the NDF's 29. And we're going to go take a look at Google and Apple. You know, got that iPhone that's being released. I think it was today. Lines were forming, or maybe it's tomorrow, and lines are really forming, if you will. So, I'm sure it's going to be a great device, and it's going to have some type of ability to talk to it or what have you. Maybe there's some voice recognition. So it'd be interesting to see how all that plays out. that's really the next generation of efficiency from a technology standpoint. If you're driving a bunch, it's so much easier to to be able to quickly dictate, if you will, into your phone. I've tried some of those services, if you will, even some of the apps, on the phone that I have, and of course, it doesn't clearly pick up my words, whatever I'm communicating it, and then you go back and you take a look at it, you're like, what? So hopefully, that's a technology that has been worked on for a long, long time. And when they get that, to be very, very cool. So now, what I've got up on my screen here, just happened to check my email while we were at break there, and had an email from a listener who wanted to take a look at PKI, and he was looking for a entry price in here. So I'm not going to do a ton of work on this one. I want to go take a look at Google, but I've got the weekly chart up here, and this is certainly something that you can learn from. When we take a look at this stock here, PKI, you can see this high volume bar that it's got, and it's going back to, and I'm on the weekly chart, May of 2009. So, geez, that sort of makes sense when we consider that the market really moved off of the bottom in March of 2009. Now, the volume that you had there on the weekly chart was 17 million, and the high on that was 1757. What you did last week was you came into that chart with 11.8 million shares. So on a weekly aspect, you came into a high volume area and you rejected it, meaning that you got into that bar, got a little bit lower than the high, and you closed above it. Last week, this closed at 1793. So, question, if I were going to get into this and take a look at this chart on a weekly basis, I'd probably wait for it to test the low of last week, which would be right around 1748, or at least start taking a look at it right when it got to that high of 1757. I wouldn't split hairs. I would if you were taking a look at this stock for that reason, I'd probably enter somewhere above 1757, if you will. Now, if we just simply pull up the daily chart, let's just see if anything sticks out here on a daily chart, other than it's kind of ugly looking because you got most of the shareholders, if you will, anybody who's bought this going back to August of 2009 is underwater. So anytime this stock starts to move up here, you're going to have folks absolutely taking some bread off of their table. When this thing made its high, it made a high. First, there was a high that it made on February 24th with 7.4 million shares, and it was it came back up and tried to get into that high again, or the top of that high, with only 2.3 million shares. When it actually did get over the high here, folks, so that high has been tested, if you will, 885,000 shares, 880. It doesn't have to get back up there. So that high that was out here has been tested, and it doesn't have to get up there. So be careful on that one. But let's go ahead. Let's pull up Google. Let's see where Google is trading. Give me a second here to pull that up. Obviously a great company. Most of us use it. Boy, that thing has gapped up, and it has sold off from the high. So it gapped up, opened at 5 591.72. Got to a high of 599.60. Trading right now at 591, so it hasn't sold off that much. The volume you've got in it today, you've already had 4 million shares. So you are an hour and 8 minutes into trading, and where that went to is it went really right to this gap. Look at the last time that we had Google gap up from July 14th to July 15th. You gapped up with 13 million shares. As soon as it got up to the top of that gap, or the top of that candle, it started to sell off. 877-927-6648. Give me a call, and we'll go take a look at whatever you'd like. We'll be right back, folks.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real Money Masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. I'm your co-host, Steve Rhodes. Today, I am the host of the Money Masters. Thanks so much for joining us, and you absolutely want to stay tuned because in the on-deck circle, we got Mr. Basil Chapman, and he is getting ready to hit it out of the park. And we've got the Dow right now. It's trying to hit it out of the park. It's up 85. The S&P's up 10. Composite 22, small caps up 3, NDX up 24. Now, we're taking a look at what I've got up on my screen, and absolutely you want to go to Tiger TV. You want to watch these shows live, or if you're listening to an archive version, you certainly want to go to Tiger TV to take a look at this. With this show here, the Money Masters is on Channel 15, and it's a great way to be educated. We've got Google. We've got the daily chart of Google on the screen here. Now, what's interesting about Google, and, I talk about patterns and how they repeat. There's non-random patterns that exist in the marketplace. Well, just like the non-random patterns that exist in your life. Each of us have patterns. Some of us have good patterns. Some of us have bad patterns. The bad ones, folks, what you want to do is you want to change those patterns right away. If you've got a pattern where you're risking too much when you're trading or you're not getting the outcome that you want, with your pattern, then you absolutely want to change that. You want to, you want to try, get some coaching services from folks like myself or Tom or Basil, David White, Ken Shreve. We've got a whole great group of folks that are here willing to help you. My coaching services, you can try those out for 30 days, risk-free, unconditional. I would rather you do that, even if you know that 31 days from now you're not going to use my services. Give me the opportunity to give you that gift. Let me teach you something, whether you're able to truly put it to play right now, or at least you've tested it out, and so that you know that somewhere down the road here, yeah, that's exactly what I want, because I can teach you how to make money. I can teach you about these patterns. When we're looking at Google here, we're looking at the gap up from July 14th to the 15th. You can see it gapped up on 13 million. Now, in Japan, we call those open windows, a rising window, if you will. I call it an open window. If the gap's down, so again, you've got a window here. And a window, it's a window, if you will, where there's no price. You can clearly take a look at it. And just like you in your home, whether you're air conditioning it in the south or you've got the heat on somewhere in the north, maybe the heat's not on just yet this time of year, when you see you've got an open window, what will you do? You will close it. Well, what did Google do? Google gapped up on the 15th, traded to a high there of 625. Got to its high. Now, on that day there, you made that high with 13 million shares. When it finally made a high going up to the level of 627.50, you did that with 2.3 million. And, what did Google do? Google came back, and it closed that window. So let's say right now you're trading Google, or you own Google, and, what you can see here is all these shareholders. Look, I don't know if it's all of them or what have you, but you can see right now what you've got some shareholders are taking advantage of that gap up. Maybe it's some folks that feel like they got stranded up here, and they're just saying, thank goodness, Google. Thank goodness that you are controlling the United States and you've had these great earnings, and they just simply want to get some of their money back. So, that's what you have that's going on. We're not seeing the air come out of the balloon or anything by any stretch of the imagination. When I just simply pull up a 10-minute chart here, you can see how it gapped up with 1.3 million shares, and you can see it's backing off. There's not any significant, selling pressure that's going on. But I believe if you take a look at just simply the pattern of Google, great chance that this window is going to get closed again. You can see here's a down window, if you will, and you can see how that eventually got filled. And stocks have patterns. You have patterns. So you got the Dow up 104 right now. Let's go take a look at Apple. Let's see what's happening with Apple. Give me one moment here to pull that up on the screen. And AAPL. And so we're taking a look at Apple. You had Apple gap up this morning as well. So you got the release of the iPhone and Gapple. How about that? You've got Apple really trying to go after its swing point high here on September the 20th. The high there, folks, is 422.86. The low is 41.19. You're trading at 416 right now. The volume was 27 million shares when it made that high on September 20th. And on Apple, that is the all-time high, if you will, at this stage. And right now, with an hour and 15 minutes into trading, you've done 6.7 million shares. So 6.7 going into 27 million shares should have the energy to get up there and to test that that high. Let's just take a look at intraday, what it is. We'll just switch here to a 5-minute chart real quickly. And again, Apple got up here, made that high, and not backing off with any kind of significant volume, if you will. So, that is certainly what is driving the NDX 100. It's up 29 points right now, and we'll see how that plays out as it goes into the end of the day. One of the things, let's go back and take a look at our trade that we really started on this morning on the 9 o'clock hour. If you just tuned into this show, you can catch me at 9 a.m. I did something a little special today, which is really was an analysis of what it is that I do for my subscribers in the market. If you're just catching this show, go back and listen to that archive, because it's a really great way to understand where the markets are going. I'll give you a little glimpse of that right now. I'm just simply going to call up the S&P 500 index, which is what we were focused on, and you'll see some candles that I've got identified there. These are Japanese candlesticks. That's why I wore my Japanese, shirt, if you will. And in this case here, what I'm showing is areas of resistance. And these areas of resistance, it's why you want to understand these candles. It's so helpful. You know, I'll teach you how to do that, whether it's on the show or whether through a newsletter. It's what it is that we trade. It's where, when you take a look at these candles, you can let all of the noise of the outside world, let it be. A good Beatles song, huh? And you can just absolutely let it be, folks, because what you can do is you can just simply trade off of here. And if you simply were going to say, what's your ideal trade, if you will, wouldn't you say to sell at the highs? Absolutely you would. And if you were to say, what's your ideal trade if you're going to buy, you would say buy at the lows. Well, what we have going on here is a consolidation pattern that's going sideways. You can see how we've been doing that. It's a multi-month consolidation pattern. We've been doing this since the beginning of August, if you will, and it's already the middle of October. So we've been doing it August, September, for what's that, 75 days or so, pretty close to it. You know, not 75 trading days, but for 2.5 months we've been going sideways. Well, we're up at the top of that consolidation range. Wouldn't you like to know that there was a Japanese candlestick called the shooting star, which is in essence, an inverted hammer? You've got to make those at the top of, you know, with a market that's moving up. That becomes really powerful resistance for you. In this case here, you can see on that candle, you know, traded that high during the day, but the bears had the real plunge. In fact, it closed very near its low. That was telling you the bears really did have control during that trading session. 877-927-6648. Give me a call if you want me to take a look at something. We'll be cruising into our last segment. Boy, time flies. Stay tuned, folks.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before October 31st from your local Barnes & Noble store. And you will be given access to not just one, but 2 exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you only have until October 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Go long, America! Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, before October 31st. You will receive in excess of $300 in trading education.
Welcome back, folks. 877-927-6648. Thanks so much for joining me. I am Steve Rhodes, co-host of the Money Masters, and Tom is out for today, but he'll be back on Monday. We'll both be back on Monday. Thanks so much for joining us. And you know what I still have up on the screen here is the S&P 500. Now I gave a trade out in the I believe it was in the first hour, and was taking a look at where our back was up against the wall because of these support lines that we were running in, or these resistant lines that we were running into, and at that time suggested the buy on the SDS. I had originally forecast 2163 at the open. We didn't get to it at the time. We finally got to it on air. It was around 2170, I believe. I think right now it's printing out at 2184. So that'd be already up 14 or 15 cents on that trade. Remember, I took a bet, a dime turned in after 18 holes, turned into $13,000, folks. So, this is where your back is up against the wall. Now, this is about giving gifts. And it's Friday. I feel great. I hope that you feel great too. And it's also about overcoming your fears. If you take a look at whatever it is that's stopping you from following through, and whatever it is you want to do in life, whether it's trading, whether it's anything else that you might want to do, it's usually 2 fears that stop you from taking action. Those actions are fears of not being enough, or fears of not being loved. Look, I want you to take those fears, and you go back and you think about it. What is it that you're afraid to do? What action are you afraid to do right this very second? What action do you know that if you took right now, you would improve your life? And if you took those 2 fears that could enter into your mind, you take out your samurai sword, folks, and I want you to envision chopping that in half, getting rid of that, because you are absolutely enough. You are more than enough. You guys are amazing. You're miraculous. It's amazing what you can do when you get rid of the fear. It's amazing how you can trade when you get rid of the fear. It's amazing how you can trade when you're only risking 1%. It totally frees you up to be able to take the trades. You know you're going to have a distribution of wins and losses, and you absolutely will be loved. We love you, and I love you tuning in. We absolutely love doing this, so get rid of that fear as well. And so, in honor of all these Japanese candlesticks that we're talking about, as I mentioned, I run scanners during the day, each night at least, looking for different stocks or ETFs, whatever it might be, that we could trade for my subscribers. I'm going to go ahead and give you a gift of stocks that just simply showed up last night. In fact, I've got them here on my screen. If you send me an email, I'll go ahead, because I didn't get a chance to really make this real pretty or not. But if you're taking a look at this, if you send me an email, steve@tfnn.com, I'll go ahead and I'll forward this chart to you, and you can go do your homework on this. Now, what this has is it's got a list of stocks here that have bearish candles, shooting stars that occurred during the last 2 days. That doesn't mean you take the trade. You absolutely have to do the work. But if you want to go take a look at, these candles, you've got quite a bit. You've got PFE, Walmart, BIB, Dish Network, Qualcomm, all kinds of, even Ford is out there. And we've got a minute. We might be able to take a look at one. So you've got those stocks there are showing your bearish shooting star candle. You've got bearish engulfing patterns. You've got McDonald's, United Technologies, Amazon, a number of stocks that show up here. Again, I haven't gone through and checked each of these out, some of them. And, you know, that's where you want to be able to do your homework. So if you are a fan of Japanese candlestick charting, and you absolutely should, you want to be able to add that. Here's a list. If you take a look at the bullish stocks that are out there, well, how about this for an instance? We had a caller that called in and asked about PKI, I believe it was. And what shows up on my screen here as a bullish candle was a hammer candle, PKI. We're going to go back and take a look at that. How's that for manifesting what it is that you want in your life? You know, I worked on this last night, or at least ran the scans, and so amazing how that works. And you too can manifest anything, absolutely anything you want in your life, folks. What you got to do is you got to visualize it. And as Tom says, you've got to step into it, and you've got to take ownership of it. Take ownership of the next hour. We got our man, Mr. Basil Chapman. Thanks so much for joining us. You guys have a great weekend, and I will see you Monday morning, 9 a.m. Have a great day, folks. Great weekend.